Hello, this is Cryptolyze. I hope you are well. This Wednesday, January 10th, 2024, we're meeting for a lot of news because we still saw a little of the fires of love last night with the validation of the spot ETFs. Well, no, a few minutes later, I should say, we had a tweet from Gary Gensler who explained to us that this was not the case. And once again, we were manipulated. Manipulate is the word that we must really remember in this spot BTC ETF, whether in its announcement, in its preparation, or in its validation. In any case, what is certain is that it has not yet been validated. In any case, officially, although now we strongly suspect that this is the case for several reasons. So we're going to come back to that. We're going to come back to the manipulation of what happened. You'll see that it's super interesting because we still have a lot of information that arrived. So the first thing is that you need to know that we had a tweet that came from the SEC, using the SEC codes, telling us that the ETFs were validated. A few seconds, well more like a few minutes later, we have Gary Gensler telling us that the SEC Twitter account has been compromised. So I like this notion of compromise. It's really important to specify it because it's not hacked, it's compromised. So there is a lot of thinking going on about this notion of non-authorization and what really happened. Was the tweet already scheduled and the person made a mistake in the settings? Was there really a hack behind it? However, what is certain is that the SEC did not have double protection regarding their Twitter account. This is what was given by, in fact, the ex-security team. So it also explains one of the reasons why it could have been hacked. And now the SEC is mandated by the U.S. government to investigate itself and validate whether or not there was market manipulation. We are not going to kid ourselves. It is certain that there was market manipulation. If we look in particular at a small graph which was proposed by Rational Root, in which we can clearly see the position of the tweet here, we can clearly see the bullish acceleration, the bearish breakout with the big sell-off, second sell-off which took place, validation by Greg Gensler that the account was hacked, and we return to the rise. The big question is what happened to the top? Why did we get this sell-off? And that's the big question. Did we really have a market manipulation to get the high part, to then cause a sell-off and then buy back on the low part? This is the big question that everyone is asking. Because in any case, it reminds us of the announcement of validation of spot ETFs that there was in October, in which we had a huge acceleration, who had retraced but who had in fact given the necessary impetus to break up 32,000 and who gave us a BTC now in the vicinity of 46,000. And there we find ourselves in approximately the same schematic. We will say that the loop is closed. The question we need to ask ourselves is, yes, there we find ourselves on what will happen when there is validation of the ETF. Because Gary Gensler's validation that it was fake news arrived in that area and not in the sell-off. Are we going to have a sell-off? That's the big question. Are we going to have the sell the news, which is now expected by some specialists? Or are we going to only have green candles of acceptance and acceleration? We will be able to fix it very quickly, given that there are only a few hours left before the final validation of the ETFs, or in all case the refusal of an ETF and the postponement of other ETFs, or the validation of all ETFs. It's going to go very quickly, and we're going to see it really, really quickly. We are going to come back to the article by Arthur Hayes, which actually offers us a vision at the crypto level and at the macro level, which is rather interesting. Many of you have asked me to come back to that. Namely that the Arthur Hayes, for those who don't know, is someone who is very influential in the field of crypto and who always has a good vision on macroeconomics in general, despite the fact that he has a little enlightened side in certain cases. In relation to what he explains that we should have roughly a fall of 30 in March before starting again with a vengeance. He explains this in two ways. Firstly, it is that we have interest rates which are overvalued. In any case, the potential drop in interest rates which are overvalued by the market, and that the Fed will not reduce the Fed rates as quickly, and therefore, inevitably, we will find ourselves in a correction of the market compared to the anticipation which was carried out. Second thing, and which is a little more complex, which is the notion of RRP. RRP being the program which was used to save all the banks present in the American regional part. We remember that in March 2023 and first quarter and second quarter 2023, we had a big problem with American banks, and in particular regional banks. And what saved the butt of the American banking sector was precisely this program, in which we made disguised loans to different banks in order to be able to maintain them. The question is, once this fund is finished, normally we are supposed to stop. The banks are supposed to repay the loan that was made. Are they going to be capable? Are we going to have a problem with this, or is this fund going to be renewed? In any case, we will have a response from the market here, and this response will initially be negative before starting to rise again because we know very well the Fed will not let this happen, and we will have an injection. Monetary, and this monetary injection does as usual. Stocks and BTC fly away. That's a little bit of what he's planning on that side. This will be one to watch, plus it's really aligning with the BTC halving. In the macroeconomics section, we can clearly see that several analysts are sounding the alarm on the fact that the Fed will not reduce interest rates this year. So, we're still going much further, but it's interesting to see that we're starting to have people who are alarmist about this, like it won't happen this year. So for me, it's neither one nor the other. We'll really be in between them. We'll start in June to slowly decrease. If we accelerate, it's because we really have a very serious problem at the level of the American economy. The American economy in which we have still had this small rebound, which is relatively strong. I'm really waiting for a retracement here in the 4,600. When I have a work of this support here in the 4,600, I will ask myself the question of, do we have an accumulation, or do we have a redistribution? Because I have another support zone which is really very important, which is 4,300, 4,150, which are overall these two zones. These are my two buy zones for the S&P 500. On the NASDAQ, it's a little different. I have a fallback zone which is very strong for me, which is the 16,000. If we hit the 16,000, I will systematically buy. The other support zone will be much lower for me in the 14,300 to 13,000. In particular, tomorrow I will talk to you about this bubble around artificial intelligence, which is very important, and which is starting to take up more and more space, and which should precisely push the NASDAQ upwards. That's why I have retracements that are perhaps much smaller, and that's why I'm really aiming above all for $16,000. And for me, the idea is to monitor the real rate here being the remunerative rate of the Fed minus inflation, which gives us the real rate. Right now we are at 125, so that means we are making 125 profits despite inflation by investing our money in American Treasury bonds. This implies that we have performance that is free, which is offered and which is 100 safe. We recall that it is the good American treasure which is considered the least risky asset in the world. And so that means that shareholders and hedge funds and investment funds do not need to seek risk to seek return, given that they have it for free. The question will be when we will return to zero, or even negative, in which people are forced to seek risk to seek return. And there are two possibilities here. Either we have the U.S. Treasury rate decreasing, or we have an increase in inflation. An increase in inflation is still unlikely, despite everything that is happening. So it will be more of a reduction in Fed rates. And if we only start to decrease in June, that means that we will certainly return to zero during the end of 2024 period. Therefore, Q4 2024, which would potentially correspond to a return of liquidity through financial tools towards risk. So it is. Ire towards stocks and towards BTC, and in particular its Bitcoin ETF, which will be validated by then, in which we will no longer have fake news. So, where are we in terms of BTC? We are back where we were, 46,190. What is interesting to see is that we are indeed regaining volatility. So we didn't expect so much volatility, or at least for the wrong reasons. And when we look at the upward acceleration, we can clearly see that we went to get some of the liquidity above 48,500 before turning around and liquidating all the people below. Well, we're not going to kid ourselves. This downward acceleration has hurt very, very badly. And when we look at the dominance, we see that we haven't broken to the upside. The dominance was relatively partial. We had a part that was cannibalized by total 3, so that's i.e. all cryptos outside of BTC and Ethereum. But what is really important to see is that despite the upward acceleration, we did not have a funding rate that was positioned. We did not have any reaction or overreaction of the market in relation to what happened. This also implies that there is a great risk that the pricing will be carried out and that we will be in a sell the news situation. In any case, we will have the answer today. For me, here, we have proof of manipulation. Once again, in which we liquidated the market, we liquidated all the shorts that were positioned, a large part of the longs that were positioned, but we must not kid ourselves no more. We repositioned once again. Longs and many, many longs which are present. On all levels, we can clearly see that the CVDs have also started to rise again. So it is true that we have a market which is back on a form of aggressiveness. And when we look closely on Kingfisher, here we have the price, which is decided, and we can clearly see that the majority of the levers are in fact, in length, up to 35,000. On the shorts, next to it, there are no almost nothing, which means that there is no aggressive positioning here in shorts. The question we will have to ask ourselves is, are we going to have a long squeeze here with a series of liquidations in a sell the news setup? Or are we going to find ourselves on a bullish acceleration, which is not going to be fueled by, here, a short squeeze, because we have very few shorts. In any case, there are very few people who are aggressive in terms of shorts, so that means that we will have to have an injection of liquidity into the market by institutional investors who should. Start Thursday, Friday. This is the different news that we have if ever it is validated. Well, today, the ETFs will be available from Thursday and from Friday, so that means that we should have an aggressive bullish reaction to course level. That will be all for this daily. I hope you liked it. If so, don't forget to leave me a like and a comment. It supports the work I do. And we'll meet again later to talk about Solana. And I invite you in the comments to select the next cryptos that will be analyzed, in which you have the list here in orange, Cody, CQT, CRV, Flow, DRC, Dusk, Quantum, TRB, ZIL, STX, RSR, CAS, WOO, HNT, Alephium. I've already done that. Boo, Say, or Sui. So don't hesitate to tell me what you think. If you ever want others, don't hesitate to suggest them too. It doesn't say that I'm treating them, but it will certainly be the next ones that will be done. And I'll see you later about Solana.